Welcome to Bunnex Investment Group. In this video, we'll talk about the TDI indicator or the Traders Dynamic Index. This is the only indicator that can read market sentiment as well as volatility at the same time. But before we go through, make sure you subscribe to this channel and check the notification bell icon so that you won't miss any of our videos as we upload. So we are going to explain this as TDI special points, the shark fin concept, levels and the TDI, and then last but not least, chart examples. You need to stick up to this point so that you fully understand how to apply the war concept that we would have talked about. So the first thing is highlighted on the outline is the TDI indicator definition as well as its special points. So as we can see, this is a snippet from a TDI, Traders Dynamic Index. It has these two lines which are called the volatility bands. These are actually derived from the primary indicator available for our trading platforms, the Bollinger Bands. And then the one in green is called the relative strength index line, also known as the RSI line. Then the one in red is actually a moving average, which is called a signal line. Just there to actually spice things up to help us find the proper entry points. And then the one in yellow is called the moving 50. It's actually one of the most important lines. So in this case, the first important is the one in blue, which are double lines, the volatility bands. Then these are RSI line, and then this moving 50. These are the ones that we are going to be using in this particular illustration. So this brings us to the shark fin concept, and a shark fin is basically a nickname given to a scenario when the RSI line goes out of the bands and then returns inside the bands. It's actually derived from the fact that a shark will actually go out of the ocean to grab probably a bird, and then what we see will be its fin when it's now going back inside the water. So it's basically a nickname we use in trading so that it will be easier for everyone to remember. So this is the first sign of the market reversal. And whenever we see this, we need to prepare ourselves for entry. I'll highlight and emphasize again, prepare ourselves for trade entry, not enter the market. However, the market is a game of manipulation and tricks, meaning this shark fin can be issued anywhere in the market flow as a way to trap traders. Sometimes you'd see a shark fin being issued in a very powerful uptrend or in a very powerful downtrend, and you try to enter a reversal to later see that you have been trapped. So this means we need to have proper positions to expect the shark fin, and this is what will be explained in the next slide. So this brings us to levels and the TDI, and levels are the backbone of forex market. In my opinion, someone may differ, may have a different view and say we need the smart money concept, we need the support and resistance and so forth. But in my opinion, what I've proved over the years and all my experience, I've seen that levels are actually the backbone of the market. The market will always follow this particular concept, and we teach this in our one-on-one that goes for $500. It's actually a live training that we carry on Zoom, and then we also teach that in our recorded course that goes for $100. It's actually a recorded course, and you get the link to the course, then you learn more about levels. We won't talk about that in this particular video. So continuing, the true shark fin comes when the market is at level 3 extremes, right? Level 3 extremes means we are at the highest points of high probability reversal, right? However, the shark fin is not an entry trigger, but a preparation sign. I'll emphasize that again, that the shark fin is not an entry but a preparation sign, and entries are made at moving 50 EMA retest as shown in the next examples. So you now need to know how exactly you enter the market, and this is what we are now going to explain in these chart examples. So this is NZD against dollar, and the first thing that I'll need to do is to have a little bit of explanation on the TDI before we talk much about the other stuff. So as shown on the snippet that was in the slides, these are the same lines, and what we call a shark fin is when the market actually pierces through these volatility bands outside and then going back inside. And then where we enter the market, we need to see three things, right? The first will be a TDI, calling for us to prepare ourselves to get an entry, and then we need to see the RSI line piercing through this moving 50 in yellow, and then we need to see the market actually coming to retest that moving 50 for our entry. So to summarize everything that I've said, a pierce of the volatility bands creating a shark fin, pierce of the 50 EMA, then retest of the 50 EMA in blue, in this one in yellow, and then make our entry. But all this being done at the level 3 extremes, right? So I've already marked the levels so that we won't spend much time in actually counting them. So we had level 1 consolidation, level 2, and at these zones, level 2 and level 3, we are now in a point to prepare ourselves to see a market reversal, right? So the first thing, we need to see a shark fin as a point or as a way of preparing ourselves. A shark fin has been issued at this point, right? After a shark fin has been issued, market went to level 3. We now need to see the market, the TDI or the RSI line on the TDI piercing through the moving 50 and then retesting the 50 EMA again, right? In this case, we can see that we had shark fin, piercing, retesting of the 50, and enter at retest of the 50, right? And this is what happened on the price side. We can see a shark fin was issued at this point, telling us to make a preparation. Then after that, a piercing was done within this floor, and then a retest of the 50 was issued at this point. And by coincidence, we had a very beautiful rejection candlestick, which actually gave us an entry point right away. These are what we call the sniper entries that would have been issued by the market, right? Then after that, we can see again counting levels again, level 1, level 2, and level 3. At level 3, we need, what do we need to see? A TDI shark fin, right? A shark fin was issued. Next, piercing of the 50 EMA was issued. Next, retest of the 50 EMA was then issued, right? After that, we make our entry. It was made at this point, right? So in this case, this was not a complete cycle, but a cycle to reset. And we also teach that in our courses. A cycle to reset, we had from this point, we came to this zone, and this was also a reset peak where we apply the same concept. We had shark fin, right? After shark fin, we had the market actually piercing the 50 and then retesting the 50 at this point, which is this same point, and our entry was made clearly, right? So basically that is how you use the TDI. And to summarize everything that we've talked in this video, the first thing is actually to see shark fin, piercing of the 50, retesting of the 50, but know the positions where this is actually anticipated. Don't just take any shark fin, because as you can see, the market will actually be giving shark fins even in a poor direction, and you would find yourself getting trapped. So to avoid that, know and understand the points where we actually expect to see the shark fin. On that note, we come to the end of this video. Check out our free Telegram channel. I'll leave the link in the description box below. See you on the next one.